Welcome to the Millennial and a Boomer Walk into a Coffee Bar podcast.
The very best podcast to get your life advice in the form of a grande caramel macchiato in a venti cup, 1/3 whole milk, 1/3 almond milk, 1/3 soy milk, double the amount of vanilla syrup, caramel wall in the cup, no caramel drizzle on top, upside down, of course, tall ice cup, whipped cream, rounded lid, one shot extra espresso, decaf, cinnamon sprinkled on the top, and for the name, that's David, spelled Dafydd, please.
Or to get your business, finance, and life support black coffee advice, I'm Dan, I'm a Boomer.
And I'm Chase, the Millennial. Thanks for joining us today.
Hey, it's good to have everybody back on our tens and tens of listeners. And Chase, always good to visit with you. I do get a kick out of this. We don't always need to agree or disagree, but it's fun to get a perspective, and it's good to spend time with you. So,
Yeah, well, we're down to only tens of listeners now because we lost them.
yeah,
Oh, bless me. See, they're making me sneeze on camera to not talk about them again.
I guess the old diatribe opportunity that I gave you on the last one about getting a loan and paying interest was.
I'm sure those will never show up in the notes again.
Yeah, well, and then pursuing an education in a field that will pay back your student loan is always important. So we lost all those people that are still paying on their student loans. So anyway, good. It's always good to do this. And I think what we were going to really try to do is we talked about don't get a loan. Then we talked about what kind of loans are, and you can either pay a loan forward and save for it and pay cash, or you can take a loan and take out money, but inevitably you're going to pay that back plus. And we want to talk about the plus now, the plus today, which happens to be the word
interest.
Yep.
Interest. Thank you for the head nod. That helped me know that it was now my turn to talk.
There you go. I can, we have all these special codes, right? So anyway.
Well, I've got an interest joke to start us out, if that's okay.
Yeah, we usually try to start with a joke, and I like interest jokes. So you piqued my interest.
Well, interest in personal finance is like that one friend who insists on coming to every party uninvited. And then that same person eats all your snacks. At first, you think, oh, this is harmless. Maybe even helpful. They're fun. But over time, they get clingier and more expensive. Suddenly, they're coming to you with an empty bag of chips saying, hey, we need some more chips. I need a new drink. Can you order a pizza? And now you're wondering if they're ever going to leave. In the world of money, interest is like hiring that roommate who doesn't pay rent, but keeps raising the utility bill. That's the guy that's on the AC, right? Always knocking the AC down. You thought borrowing a little cash wouldn't hurt, but now interest is just hanging around, racking up the charges. And before you know it, you're throwing a going away party for your own paycheck because interest has made it long gone.
Wow, that was a long one.
Well,
I know. Interest is not your friend. It's now, depending on who, where, why, how much you borrow, your interest is going to change. It's not all the same. It's not, hey, you got to pay back 20 cents for every dollar that you borrow from me, but they don't have the same interest rates, and some charge more or less than others depending on a lot of things. And I'm going to go back in time to one of our huge disagreements, and that is on your credit score. And your income, your property, the kind and reason for the loan, it can certainly change how much you have to pay back.
Yeah. So let's talk about interest because we're going to disagree on that one. Loans are for the birds. But interest is expressed as a percentage of the amount you borrow. And it's charged over a period of time, such as maybe it's a month or a year, or maybe even in some instances, the entire term of the loan. So You got an example on there for us? What does that mean? How does this all look?
I'm kind of at a loss. I'm going back upstream a little bit, and and I'm having a boomer moment here. And you want an example? Go ahead and give us an example.
All right, I'll give an example. Let's say you borrow $100 from a friend
Yep,
and you agree to pay him back $110 in 1 year.
yep,
You're now paying him 10% interest per year.
yep.
That's just kind of a backwards way of thinking about it in a new way. Hopefully, we'll understand it as we dig through this. The problem is interest rates are not all the same. And not all loans and credit have the same interest rates. They're always changing. You might have heard something about this. It's been in the news a lot lately with the Fed, which, let's end the Fed, but that's a whole nother episode for another day. They talk a lot about raising and lowering interest rates and all these
Right.
different things, but that there's not like one guy. It's not old Powell that will raise and lower every interest rate on every type of loan. So can you give some examples? Here we go. Can you give some examples of some places that they're different? Like, what are the different ways or the different types?
Yeah, before I go there, let me tell you, there's the different types of loans, and this is kind of where I was getting hung up is if you get a credit card loan, it's typically a larger interest rate than if you're getting a house loan. A car loan is actually in between that maybe of a credit card rate and a home loan, or sometimes even higher. So search out what type of loan and what you're going to get with the money, and you can do that by going to these various places that will actually provide you a loan. I'm going to speak for the millennial here. Don't go get a loan. I'm going to speak for the boomer here. If you're going to go get a loan, there's some places that are okay to go get a bad loan or a loan in your mind. And there's some places that you should avoid under any circumstances to get a loan. But let's start and look at some of these that are opportunities to get a loan. A bank, right? Banks, they offer loans, they offer credit, they offer mortgages and car loans, personal loans, credit cards, overdraft protection. You should never use overdraft. That's the absolute worst kind of loan. If you don't have the money, you don't go spend the money. If you have a situation where you need to get a loan, go in with your eyes wide open. And a good place to start, if it's absolutely necessary for those few instances when you get a loan, is to a bank.
Or a credit union. I'm partial to a credit
Yeah,
union.
yeah.
Let's keep it local.
There you go. I think of them as the same thing, but you are exactly right. Deal with a credit loan, a credit union.
Yeah. Which makes it sound bad, right? Because I'm always against credit, but a credit union, I'm all for. Go figure.
I can't believe
Millennials,
those
man.
words came out of your mouth. Go to a credit union. Yeah, okay.
Yeah.
Um,
So, I mean, banks charge medium interest rates. Banks and credit unions charge medium interest rates compared to all the other options out there. And it's really depending upon the kind and the type of loan. So, for instance, you mentioned that house loans are usually cheaper. Well, there's a simple reason because it's backed by your house. You don't pay that loan, the bank still has a
exactly.
house that they can sell. As opposed to a credit card, like, sorry, you can't sell the tacos you ate 42 months ago that you're still paying off, right? So there's a difference. And because of that risk, they have a higher percentage. Banks.
Exactly.
Oh, go
And
ahead.
and they usually, I like that analogy, but and you go in to get a car, your car loan is going to be very high typically. A bank can't repossess your car and sell it for the amount that you borrowed typically because it depreciates so fast. So they're going to try to get their money back faster on a car loan than they are on a mortgage loan. And it all depends on what you're going to put up as collateral in case you default on your loan. But banks usually have rules, and they're usually published rules. You can go into the bank and say, I want a loan for whatever. They've got firm set rules, this, and this. And it's pretty straightforward. And you can sit there and canoodle on that and say, hey, do I really want to go get a loan from a bank?
they also are very upfront with how it all looks. They
Yeah.
showcase the
Yeah.
payment plan, the monthly payments. They
Yep.
show what the charged fees will be for late payments, early payments, or other services. And I don't think a lot of people realize that everyone knows you get charged extra for late payments. Some loans you get charged for early payments. If you try to pay the loan off sooner, you actually get a charge for that because the bank wants their full amount of money.
Yeah. Yeah, and like I said, they usually have rules and they're upfront about that. But one thing that banks do and do very well is they make it really easy for you to pay that money back. And I'm not talking about giving you the opportunity to make money to pay it back. I'm saying they give you direct deposit or auto pay or all of these options, and they've got these standards and machines and websites that really borrow from me and you can pay back. You still have to come up with the money, which is never easy to come up with. You work hard for your money, but they make it easy for the mechanics to pay that loan back.
So that's banks and credit unions. The next
Yep.
option is merchants. What is a merchant?
A merchant in this particular case and in this text is someone that sells services like a store, right? Or a car seller or a school. They lend money to their customers either by themselves or through a bank, but they're going to be a merchant that has a service or some kind of loan opportunity for you to invest, to borrow money from.
And this is a lot different than getting money from a bank.
Correct.
Is
This
it?
is almost like getting money from a third party.
Yeah. Okay, so are they easier or harder to get money from?
They usually have more forgiving rules or easier rules, I should say, like needing a proof of who you are and how much money you make or a down payment, and then they're willing to give you their money. Typically, these people are more aggressive in providing you a loan, and they overlook either bad credit a lot of times, or they make you pay more for it. But they're there to make money by giving money. Banks aren't necessarily, they've got their firm set of rules. These guys, they'll almost give a loan to anybody, but that person will pay for the loan depending on their financial background.
And they'll pay dearly when something
Oh,
wrong happens. Yeah.
Oh, they charge high interest rates, especially if they offer no interest or low interest deals that end after a while. They want to get their hook in you and they want you to take their money. Above all, that I don't know. Okay, now we're going to lose all of the mom and pop, payday loans and all this other stuff, but they're rascals. They are really rascals because they want you above everything else to have their money in your pocket because they're going to get their money back one way or another.
Yeah, I had a college student once ask me, "Hey, how does this all work? Like, I got this money from this place and I can't pay it this month. What's going to happen?" And so we pulled out their document and it was 0% interest for the first 12 months or something like that. But if you don't pay 1 month, it was 39%. 39%. That's mind-boggling to me.
You know, this is interesting too because I've seen these, hey, no payments until 1 year or
Yeah.
whatever. But what they do is they say you have a year to pay it off. You're not going to charge you any interest until 1 year. And then that 1 year comes and you haven't been paying or you haven't been paying interest. That 1 year hits, they, excuse me, they tack on the interest for the entire last year. They don't just all of a sudden start here from going forward, you're going to pay interest. Be careful because they'll go back to day one and say, oh, you owe us all this interest. So those no interest for a year, the best expectation on that is under all circumstances, pay it off within that year because they'll tack it on. A lot of stores use this. You go and buy furniture. Hey, we'll finance you and no payment. Be careful because that could be very, very upsetting to your financial stability.
Yeah. Last thing on these guys, they have limited locations, limited hours, and options that affect how easy and helpful it is to borrow money from them. They're not quite the same or upfront as a bank or credit union.
And inevitably there's at least one person in the organization named Guido that can come. No offense to our Italian listeners. They're just
Well, we
maybe
just
we
lost an
should make.
entire continent that time, but
Yeah. Anyway, so the next type is kind of I'll call it peer to peer, borrowing money from someone you know. It's a way of lending and borrowing that involves people or groups, but not necessarily places, right? Not necessarily a bank. They use online platforms and say, hey, join this app, plug this in. They make it pretty easy for you, and they charge a fee for doing that. They may have different rules depending on what lenders want, what lender borrowers want, and what they have, but they're friends. That you may not even know them, but here, download our app, buddy. Here, we'll go ahead and take care of it. And they can be anywhere from low to high interest rates because there's money to be made in borrowing money. This is just another organization that I would call peer to peer. That it's pretty risky, and you don't know who you're dealing with, but man, they'll treat you like a friend.
yeah, they usually have flexible payment plans, monthly payments, one-time payments, donations. They have all kinds of different things. And they sometimes have good and sometimes they have bad things in terms of how easy and helpful it is to borrow money from them, depending on
Yeah.
how good or reliable the platform and the people are. And that's one of the big questions there is who's behind this. And sometimes you just don't know.
Right. And they also tend to make it easy, and you'll see a lot of advertisements for a lot of these people. Just be very wary of these. We're starting to go from if you have to get a loan, the banks and credit unions, and now we're going down to where it's getting a little bit more risky and a little bit more, do we really want to do that? And this next type, I would advise every millennial, every Generation Z, every boomer to never use. So we just lost all these people as our listeners, but those are payday loans. Oh my goodness. I can't rant enough about these folks.
Oh, they're terrible. They're short and expensive loans that are meant to give cash until your next payday. Thus the title, payday loans. Payday loans, usually offered by special places like shops, sometimes online platforms. And you see them a lot of times, they do check cashing. And that's how they pull people in originally, I think. But I don't know. This one is rough. I would not go within, a mile of this place. I'll turn my nose the other direction as I drive past these places.
Well, exactly. And the thing is if you think you need your payday money 1 day, 3 days, 5 days earlier, and you go in, these guys make it easy for, hey, we'll give you you just bring your check over and give it to us after you're done, and we'll give it to you. But they charge a hefty fee for that. And you need to be solvent enough that you can live with your emergency fund and everything else. You should never ever. It's one of the available things, and they always have yellow lettering on their sign that's in big letters that's out there now. Every we just lost all those people that mixed up yellow paint, but they're after you, and they make it easy, and it's flashing. If you need money, come talk to us. Just come back and talk to us after the payday.
Well, here's the good news. Our listeners do not utilize payday loans because they have a budget and they've got an emergency fund and they never get into a dire strait where this is needed. But for those of you who have friends and family members, just know that payday loans charge very, very high interest rates, often as showing as fees, and that are based on how much and how long you borrow the money. And these dudes are not usually in it for months or years at a time. They're charging you a ton of money to get you to the 15th when your next paycheck hits.
Exactly. Exactly. It's short term, and it's exorbitant fees that you pay. And also they typically they say, hey, what's your bank account? They line it up so that they can make these direct deposits and everything. It can open you up to other type of nefarious opportunities, like stolen identity. And I'm not saying that these guys are crooks or anything else, because it's a business model that makes money. But I tell you, don't use these payday loans. Hang in there, uh, fast for a couple of days if you need to. But man, try not to use these guys. Besides that, if you don't pay them back, these are the kind of guys that will harass you, they'll embarrass you, because typically the financial stability of people that get payday loans is poor, and these guys prey on those type of people. So I'm just saying, just be very, very careful. And then if you really want to go to the next, we started out at banks and we're nosediving down from there. Title loans. These guys are a notch below the payday loans when they say, hey, we've lost all our listeners from those guys. A good thing they don't advertise and pay our bills. These guys will say, hey, oh, give me your car title and I'll give you some money. And then they charge you interest on top of that. But if you don't pay them back, guess what? They own your car. They own your house. They own your. It's a bad, bad situation where these title loans, they're short, expensive, they're backed by that title, and they're offered special places like some of these shops and title loans and everything else. They have really easy rules. If you have something that is of value, I'll give you money. You just give me your title. They're loosey goosey and go do it.
Yeah, if we thought the others were high interest rates, we're talking such high double digits with these nerds, and then there's fees that get tacked on, and then all of that just compounds for the length of which you borrow money with them. Normally, title loans have very short payment plans, like 2 weeks or a month.
Yeah.
But sometimes you actually have to give the vehicle over. You have to hand the keys over while you have their money.
I tell you, it's a slippery slope on using some of these guys. And let me tell you, on every one of these activities where you borrow money, if you don't pay it back, it's going to hurt your credit score. It's going to hurt in so many ways. That do everything you can before you get a loan, just so you're in the driver's seat, because you're indebted to these people that give you the money, and it's not a good situation to be indebted to people.
All right, so we've laid it out with the predatory sharks here, and all the different options. Now we've got a couple questions that people need to ask. What are the questions that people need to ask for how to choose the best place to borrow their money?
Okay, what you need it for and what you want from it. So, number one, loud and clear, how are you going to pay it back? Have a plan to pay it back. Number two, why do you need to borrow that money? And is there any other way or option to not have to borrow that money? How long do you need to borrow it? How long do you need to pay it back? How will you use it? These are some of the questions you need to ask before you sign on that dotted line to get either a loan or to get credit.
All right, so there's this secondary questions here, or some things to consider, right? Not only do you ask those questions before,
Right.
but you've got to think about how much money do you make, how much money do you spend, how much money do you save, and then how much money can you owe? And all of this has to happen before.
And we could actually, if someone were to sign in and get a free coffee cup, we could even put inside the coffee cup a little typed thing that says, here's the questions you need to ask before you get it. By the way, just all you have to do is let us know and you can get a coffee cup. I do want to say this too. Before you get a loan, know that there are choices between where and how and why you get that loan, but there are other ways to finance the purchase that you think you need with that borrowed money. What are the different places that you can go? What are the good things and what are the bad things? But also compare interest rates, compare payment plans, and all of these questions you need to ask yourself before you get a loan. But the best way to do it is to think about ways to pay back. No, to think about ways to pay for that without borrowing that money.
And please, before you sell your soul to some of these guys at the bottom of the list, figure out if you can live without it for just a little longer while you
Exactly.
save up. Because trust me,
Exactly.
it's just not going to be worth it to go with some of those bottom feeders.
You know, and you said it earlier, and it fits. There's legitimate loans, reasons to get a loan. There's brilliant ways to pay it back, but there's a lot of predatory loan sharks out there, and just be careful, very, very careful. So
Well, I
be
mean, I think
mindful of
that's,
what you're looking
yeah,
at.
I think that's a really good point, because if you have a good relationship with your local credit union, they actually want you to be successful. They want this to work out and for you to come back in the future and have your checking account with them, have your savings account with them, have all these other things that they have going on. But these dudes who are just loaning with super high interest rates, they don't care if they never see you again, because they're going to own you by the time it's all said and done. And then they're going to move on to the next poor sap who doesn't know anything and
Yeah.
goes in and sells his soul for a couple bucks.
You know, I think it's fitting to end this podcast with some words of wisdom, and I think that the best thing we can do is, just because it's different,
Doesn't mean it's wrong.
that's
See you
right.
next time.
Be careful about getting a loan ever. See you, Chase.